Good morning, everyone, and thanks for coming to the show today. And whether you're listening live or catch it on tape later, I'm sure it'll help educate you. Some people may know what Save Canadian Mining is, but let me just summarize what it is. It's a advocacy group that's purely volunteer-led. We basically have we pay two people. We pay an advertising agency and a government lobbying group. And what we're trying to do as an organization is to stop predatory short selling. Basically, what predatory short selling is we're not against short selling. That's a common misconception. Short selling is fine if you actually borrow the stock and sell something short and you believe something's going down. That's a legit activity. But what happens is all too often in our space and in small, public markets across the globe, and people naked short. So in other words, they sell a stock they don't own, they don't really cover, and this leads to downward price action, and that's a problem. It creates misconceptions for investors, and it's basically a systematic way for, generally speaking, offshore hedge funds to loot the capital markets, deprive companies of needed capital, and deprive investors of their justified returns. So, the whole thesis, I guess, we focused on one issue, predatory short selling, and we drew attention to the fact that when the uptick rule, up until 2012, for 142 years in the Canadian capital markets and indeed around the world, if you wanted to short a stock, the stock had to be going up. In other words, the uptick. So when they took out the uptick rule in 2012, it was basically taken out because they couldn't figure out a way to do a consolidated tape, or they didn't want to. They basically didn't target it specifically. They just said that we don't think it's needed anymore. And, we're about to show you some research that proves that that was categorically wrong. And then, in fact, it opened up this whole algorithmic trading thing that has become, unfortunately, there may have been some benefits for it, but the negatives have been pretty profound, and we'll talk about that. So let's just move along with the slideshow. When we first started this about 2 years ago, I was sort of like a voice in the wilderness, and but luckily there was a lot of experienced players like Eric Sprott and Sean Roos and many others in the mining sector that knew this was a real problem and got behind the initiative early. But today, I would say predatory short selling is sort of top of the charts. The GameStop Reddit whole thing has brought this to front page news literally around the world, and now the politicians are getting active, and it's predatory short selling and naked short selling is a big issue, and now it's sort of been exposed probably for the first time to the mainstream, and that's a benefit. The reality is it's been around for some time, and when we started this initiative, we thought we needed to develop some hard statistics to show what has really happened. So we hired a very good research organization called Murenbeeld. Many of the mining investors will be familiar with them. They're very outstanding gold and silver price forecasts are very well respected across the industry. And Murenbeeld did this study for us. We basically this is what I call the money shot. In terms of the camera world, the evidence is right on the screen. So historically, Canadian mining markets would have tended to basically mirror the commodity market. So they tended to be a little bit above or a little bit below, or generally, on par with the commodity index, which sort of makes sense when you think of it. We're a commodity business, so we should rise and fall with the commodity prices. So if you look at the chart, when if X marks the day when in 2012 when the rules changed, when the commodity index was 1 and the stock index on the metals and mining sector was 1, that would be day 1. And now we flash forward to today where we're at, and we basically see that the stock index is down at 35, the commodity index at 93. So it generally means that the stock would have to go up 2.5, 3 times across the board to get to normal. So think about that if you're an investor in mining, what that would mean to you, and what does that mean for our mining companies and their ability to grow. So our takeaway, when we looked at this, and we'll show you through some of these slides, but these are the points to remember, is that, the radical loss of investor value, 2.5 to 3 times. The decline in stock price isn't linked to the decline in commodities. As a result of this decline in stock price, we're getting a lot less issuers, and we're raising a lot less capital. And as a result, obviously, if you're raising less capital, mining companies are spending a lot less. So none of this is good for our ability as miners to find resources that are needed in society, and it's not good for our investors. So just stepping through some of these slides just to show you that this is the hard evidence. So when people say this is not factual, I say, well, look at the facts. Facts are there's a lot less issuers. This is just another look at a different take of the slide. This is TSXV over the commodity index. So any way you look at it, stocks are down dramatically over what historically they should be. And we're raising a lot less money overall as a sector. What does that mean from a business multiple? Mining is a huge impact in Canadian economy, something like 12%. Pardon me, that's another stat, but it's a significant factor. And our jobs that we create are very well paid, and and within the mining sector, 12% of our workforce is Indigenous. So as we reduce our ability to grow as mining companies, our ability to help our communities and help our workforce is reduced as well. So this is directly impacting us on a real significant level. So our takeaway, as a group, was that there is a problem, and what are we going to do about it? So we're finally we're starting to see some significant action. Many of you may be aware, some may not. Cormark, which is otherwise a fine securities firm, had to pay a fairly serious fine, $800,000, for basically allowing, I think, about $600 million worth of sales that were marked long when they should have been short. And this happens all the time. If you think Cormark is the only investment bank that has allowed this to happen in Canada or around the world, you'd be wrong. And these fines, this Cormark fine is just is a drop on the bucket, really. It's $600 million worth of share sales. So in the U.S., Goldman Sachs, Merrill Lynch, all these people have paid $10, $15, $20 million fines, for similar actions. So clearly, in a way, the self-regulatory system, the banks, hasn't worked out, and so our takeaway is that you need much more serious regulatory reform to make this, go away. We have to stop this in its tracks. So what can government do? Ideally, the best solution would be to reinstate the tick test. Government, lobbyists that we've talked to, some people have said, well, that would be complicated. We'd have to spend a couple $1 million writing, this code and figure it all out. And I'm well, you created the problem, you should fix it. I don't care what it costs, just get it done. And that's sort of how I view, because ultimately that would be the best method to restrain this. Because, when you think of what the tick test was designed to do, it was basically designed to promote capital formation. Markets exist really to provide individual investors with more products to invest in and more choice. And it also exists to basically allow companies to access broader pools of capital. That's the fundamental reasons why stock markets exist. They don't exist to allow hedge funds from offshore to make easy predatory profits. That's not why we exist. And we need to, that needs to be sort of in everyone's mind. So that's what would be ideal. What would be acceptable? Well, the Ontario government has had a task force, and the task force, who we've lobbied, extensively over the last 2 years, has come back with some seriously good recommendations that could have a profound impact on short selling. And here are the two of them. Their first one would be to make it illegal to cover short sales in a private placement. It happens all the time in our sector, in mining, where mining, you sort of know when the companies are coming to the market, because they get funded for, an exploration program. And once it's done, they have their results. They're good or they're bad. If they're good, our stock should move up in a theoretical world. If they're bad, it goes down. But at some point, if you're good, you need more capital to bring that mine closer to, final feasibility or put it in production. So the process on the private placement side right now is they know you're coming, they start to short your stock, and then they cover in the private placement. And the companies really have no choice but to take the money because that's the money that's being offered. And so the recommendation is people will have to sign in their private placement subscription forms that they haven't short sold the stock within a period of time. And there'll be serious teeth. Like we're saying to the government, you need to put serious teeth on that. So if you actually break that infraction, it's jail time. Like that's what we want. Like let's we don't want people trying to skirt the issue as they so often do in this space. That's one point. Second, probably the biggest impact we could have is this one. Right now in Canada, if you trade a security, you have 2 days to settle that trade. T+2, it's called in the industry. But if you have before it becomes a failed trade and you get bought in theory, you have 10 days. So in other words, if you forgot to bring your share certificate to your broker, dog ate your homework, whatever, you have 10 days. Now, what happens is the reality is in this system, on the 11th day, in my view, what happens is the hedge funds flip the stock to their next numbered company and never cover. So this is why these things don't show up in short reports, because nobody ever really marks it short. We just saw the Cormark, fine, which basically had mistakenly mismarked $600 million worth of trades. You think that they're just not the only one. This happens all the time. This is how it happens. So the good news is one of the recommendations on the committee is to go to T+2 plus 4. So in other words, after T+2, you have 4 days, and at the end of 4 days, either you've delivered your security, you have a contracted borrow, not a I think I can borrow, maybe I can hope I can borrow. No, a contracted borrow, or you get bought in. So that's serious. If that happens, that would clean up a lot of this problem, and that would be very positive for our space. The challenge with all this is, we're sort of pushing, against some pretty deep, powerful forces. They control media, they control influencers. So in many ways, they're lobbying the government with much more force than we can. So is it possible nothing will happen? Yeah, I'd say that's very possible. So that's why it's important that we, as a group, come together and we put together. This is an entirely voluntary coalition that's come together. We've got some people. Eric Sprott's been probably our biggest benefactor, and he's been our sort of spiritual champion and helping us, guiding us through this process and helping us to raise exposure. And Eric doesn't need to do this to make any more investment profits. He's doing very well on his own, thank you very much. But he recognizes that he's generally a long investor, and basically that's how you create value in industries and in society, is by making productive investments. And what we've seen, unfortunately, is this since 2012. I call it almost a cronyism instead of capitalism has happened. And we need to get back to capitalism. Let good companies get rewarded with good stocks, and let bad companies get see their financings disappear. And let's reward investors for making good choices, and do it fairly. And finally, I think we're at a time where we can maybe do that because of the the Reddit thing putting this at sort of on the front page, and the evidence of the problem that's out there. But we need to sort of rattle the chains, and we need more people to support. So if you think this is a good thing for you, if you'd like to see your stocks triple, then by all means come and help us at Save Canadian Mining. Join the cause, register. If you're a company, please be part of our ongoing growing coalition. Help us along with some donations. This all goes back into the advocacy. Nobody else is getting paid. I'm not getting a dime. I'm just, we put money in personally and professionally to try and support this change. So that's Save Canadian Mining. That's our update. We think we're on the verge of getting some good constructive change, but it's never over in the government business until legislature enacts a law. So we need to get to the close on this. and make serious change while the opportunity is right, because it would be really great for the sector, for our investors, for our communities, and for our companies. So that's it, John. I'm happy to chat now.
Okay, thanks, Terry. Great presentation. So if you weren't aware of the initiative, now you are. And Terry, who would, or where would they reach out to sign up?
It's best go to savecanadianmining.com. You could register your support there, and we reach out to the community and update them as we are making changes. And we're going to try over the next. We think there's a chance to get this into the spring budget. And so the next 3 or 4 months are going to be critical. So we'll be, doing a number more podcasts. We'll bring, we'll get, some of our partners like Eric and Keith Neumeier and these guys back on and talking about the issue and talking about what an impact it could have for us. So hopefully just to try and, again, raise awareness, to keep government's feet to the fire, to make the changes that should be made. This was not a rule change that was caused by the Ford government. They didn't make the change. They're trying to clean it up, I think, and we want to encourage them to do that. Securities are a provincial issue in Canada. The reason why we focused in Ontario is that it's obviously the biggest jurisdiction. If you don't get them, it doesn't really matter. But obviously, we need to follow through with BC and Quebec and all of it. But if you get Ontario, it's very likely the others will fall in line, because at the end of the day, it makes practical sense for all those constituents.
Okay, we are tight for time here, but Barry did have a question. Terry, do you think the strong trend to passive investing has been a factor in the decline to, I'm assuming he's speaking about the decline or the gap between?
I think, it would be sophomoric to say this is the only reason why there's been a decline, but the ETFs and the movement to ETFs certainly has impacted it. But there's no question that this has been a negative factor on stock performance for individual stocks. It's also been a negative factor on capital raising ability. So there's no question, if you make these changes, we will see a healthier capital market for our companies and for our investors.
So I had a question, Terry. I know in the U.S. They repealed their old uptick rule as well, but they actually have what I believe is called an alternative uptick rule, Rule 201, something like that. If the stock price falls by 10%, so normally, you can sell short however you want, but if the stock price falls more than 10%, they sort of implement this alternative uptick rule, which essentially puts the uptick rule back in place for that trading day and the day after. Could something like that work in Canada as well to at least stop the if you talk to the American counterparts in this, I've talked to some of the biggest players, people like a lawyer there has had won 20 lawsuits on short cases with the biggest banks in the planet, and they feel that rule doesn't work. It just flat out doesn't work. It's a Band-Aid over a gaping wound. So in my mind, the tick test would be the best way. But honestly, the transaction settlement, if they made that change, that would be profound. And also enforcing this, not letting people cover in the private placements. That's just a ridiculous way for things to be run. I mean, it's terrible. Yeah, and ultimately it will come down to enforcement. I mean, I suppose it's a subjective opinion, but you could argue certainly in Canada, we have rules for a lot of things, but in my experience, it seems like those rules are not enforced already as it is. So
1,000%.
Yeah. So
No, I mean,
to make it work, you need the enforcement.
Yeah, in theory, this is should be. The covering and the private placements in theory is already not allowed, but practically every private placement out there, this happens. So you have to put more teeth behind it, and the regulators have to regulate. They need to actually take some action, and people need to pay serious fines. People need to suffer the punishment. So we need to show that there's actually people looking out for the investor and for the companies.
Okay. Well, Terry, again, thank you very much for joining us today and sharing this. It's good to get an update, and I certainly wish you well in your task, and I hope anyone listening in, if you like what you heard from Terry, you think that's a good thing, he's given you the ability, savecanadianmining.com or .ca, sorry.
.com, yeah.
.com, and sign up, and you can find out how to help. So Terry, you take care until we speak next time.
Okay.
And
Thanks, guys.
good to have you. Stay safe.
Great to be here.